Did you see that news clip?
If you enjoy the video, hit the like. If you want to see more, be sure to subscribe.
Welcome to another episode of Clips of News. On today's episode, where I go over news clips, news articles, news clips that I found that I think are really, really interesting. And I just share them with you, the internet. And that's what Clips of News is. So let's get straight into it. On today's episode, we are going to be talking about the IRS. But there's a couple disclaimers. One, I'm not a financial expert. I'm just a guy on YouTube sharing my thoughts and experiences with you guys. Two, I am not a tax expert, so I do not do taxes for a living. I do my own personal taxes. I've been doing my own personal taxes for, I want to say, like 7 years, maybe 8, somewhere around there. But I've been doing my own taxes for quite some time, and I've not been audited or owed IRS or anything of that nature. So with that being said, all the information that I'm about to give you today I will leave links in the description below that you guys can go and look and research it yourself and read the full articles, watch the full videos, and so on and so forth. So we're going to talk about 3 different things today when it pertains to the IRS, right? One, we're going to talk about this Venmo and PayPal and the Cash App money that they want you to start filing for. 2, we're going to talk about how the IRS wants to use facial recognition technology in order for you to get your information and things like that. And 3, we're just going to go over capital gains tax because I think it's very important. Not enough people really understand capital gains tax, especially since I make a lot of videos pertaining to investing your money. I personally do not have a savings account. I don't believe in them. I stopped using savings accounts maybe 2 years ago, and all of my money is just invested. Whenever I have money, I invest it. Like, that's just what I do. Whether I invested in crypto, I invested in property through Fundrise, I invested in stocks through my various stock accounts. And so I just want to go over a couple of things with you guys when it comes to the IRS. With that being said, first I want to get into the clip pertaining to the Venmo and PayPal and those type of things. It's a short little clip, and then after that we will talk about the Face ID, and then I will go into the capital gains tax. Let's check it out.
Tax requirements for people doing business on third-party apps like Venmo, PayPal, Cash App. Liza Lucas turned to some experts to break it down for us, all new for you this morning.
The tax reporting change took effect on January 1st, so electronic payment apps like these are now required to report transactions for goods and services totaling more than $600 a year. So if your small business operates on apps like Venmo or you use it as a side gig, this could affect you.
Third-party processors are now required to report it if you have received at least $600.
That essentially means it's automatically being reported to the IRS. Financial expert Andrew Poulos says the change comes amid an increase in gig workers and freelancers working from home during the pandemic. It's designed to crack down on unpaid taxes, so those who exceed the $600 threshold will receive a 1099-K form. But to be clear, the change does not affect things like reimbursing family members and friends, or just using an app to split your dinner bill.
If you sold your sneakers or your jeans to someone and they sent you a Cash App or a PayPal of $50, that's not taxable. That's your personal belongings that you're selling, unless you're doing it as an active trade or business. So that's not what the IRS is targeting.
To help streamline the changes, both PayPal and Venmo now let you tag your transactions as either personal or goods and services. And if you are operating a business or a side gig using these apps, you need to keep records, report the income as required, and take advantage of related deductions.
It's in your best interest to report the income that you received, and then of course you get all the deductions. The IRS is not going to take deductions for you.
Because this took effect January 1, this change will impact next year's tax filing, but experts emphasize to keep records starting now and then reach out to a tax professional if you have more questions about what is considered taxable income.
So as you saw in that clip, all of these things that is just pertaining to next year. So next year when you file your taxes, they're going to want to know. But with that being said, when you're using these apps, Cash App, PayPal, Venmo, and whatever other money transferring apps that you might be using, sometimes they have it where you can select it as a gift. So if you're giving somebody something, I suggest you select it as a gift, right? Or in the subject line, write what it's for. When someone sends you money or you're sending someone money, write what you're sending them that for. What is the purpose of the money? Because the guy said that, if you sell your jeans for $50 and somebody sends it to you, you don't have to disclose that. But that's not true, because if you do that enough times and it equals out to $700 for the year, they're going to send that paperwork to the IRS and you will end up having to pay taxes on that $700. So in which case, you would want it to be labeled as a gift when the person sends you the $50, even though this person paid for it. And this is not me telling you to do that. I'm just giving you an example of what you could do or what could be done. I'm not telling nobody not to pay their taxes and none of that. That ain't what I'm doing. I'm just giving you examples and whatnot. But when you're sending people money on PayPal, Cash App, Venmo, again, there is a selection where you can mark it as a gift. I suggest writing in the subject line what the money is for. And if they have it where you can decide whether it's for personal or business, definitely make sure people mark it down for whatever it's for. Because again, you don't want the IRS coming down your throat, and that sounded derogatory, but you don't want the IRS coming at you trying to get money up out of you, right? You don't want those problems. So let's get into the next story, which is going to be the IRS looking to start using facial scans. And I did not get to fully mark up this article, but you can see here that the IRS will start using facial recognition this summer, and you'll have to send off a selfie if you want to pay your taxes online. And this is Business Insider that wrote this article, right? So we're going to come down here and let's read through. It's not that long. We're just going to read through it a little bit and run through it really fast. So the Internal Revenue Service, IRS, is going to require users of its online tax payment services to create an identification account, which will involve sending off a selfie for facial recognition. Security blogger Brian Krebs was the first to spot a message on the IRS website directing users to create an account with a company called ID Me. A lot of people may not know about ID Me, but that's what they do. They specialize in facial recognition technology and IDs and facial scanning in order to get into apps and programs. If you have an existing IRD username, please create a new ID.me account as soon as possible. We're bringing you an improved sign-in experience. You won't be able to log in with your existing IRS username and password starting in summer of 2022. The message read, create an ID Me account involves submitting various pieces of official documentation as well as taking a live video selfie. An IRS spokesperson confirmed to Gizmodo that users will need an ID Me account to make and view payments and access their tax records. The Department of Treasury did not immediately respond when contacted by the insider. ID Me offers digital identification services and was able to land contracts with the U.S. state governments over the course of the pandemic, Bloomberg reports. One user told Bloomberg they ran into significant problems trying to send off a selfie to ID Me, as the app failed to recognize her face and then locked her out for 72 hours at a time. Bloomberg also found a log of complaints lodged against ID Me by users with California's Employment Development Department. One complaint involved a transgender user who was blocked from accessing state benefits because the gender stated on their driver's license and their passport didn't match. So that could be a major problem for a lot of people, specifically transgenders, or even people who their face may have changed a significant amount from what it is that their ID says. So with this being said, I just really thought that this is important. Now, do I agree? Do I not agree? I don't know. I don't have much to say about it. I kind of think it's good, because if you're getting on a government website where the government they have like your information, I think that it is very important that they use, they know for a fact that whoever's accessing the site is the person who says that they need to see this, right? Because I don't want just anybody getting into my tax records. So even if you did steal my username and my password, you still wouldn't be able to get into my tax information because you don't have my face. You would need to, hold my face to the screen and whatnot in order to get in. And being that we are progressing as a society into more technological age, this kind of makes sense. But then again, this kind of goes into voting, right? So when are we going to get to the point where voting is an online thing where everybody can vote from their computer and all they do is scan your face and your ID, and then that way they know it's you that's about to vote? The same way if you're in college, they have Honor Lock where you can literally take tests with the webcam on, and if you look down or you looking away or you start talking to somebody, you instantly fail the test. So it's not like we don't have the technology to ensure that whoever's in front of the computer is the person who claims that they are in front of the computer. We have that technology. So I don't know. I'm kind of for it. I'm not really for it. I don't really know. I haven't really sat down and really thought it through all the way yet. So leave a comment and we can discuss this thing. But another thing to think about too is consider buying stock in ID Me, right? Consider looking into their stock because, again, they have a contract with the United States government, and you would want to know, well, how long is the contract? I'm pretty sure it's not for 1 year. It's going to be a good amount, but that's just something to look into. So onto the main crux of the cranny for this video, right? And in which case, if you made it this far, I want to say thank you. And I also want to say that most YouTube videos, when you're watching them, you're not really going to get the good information until you've either gone into like the middle of the video or closer to the ending. Like, that's usually how YouTube video works, especially if you're talking about like a 20-minute, 30-minute YouTube video. The good, juicy stuff, like the important stuff, usually isn't until the middle. The beginning is usually like an introduction and them talking and advertising and things like that. And then they get into the good stuff. So thanks for watching. But let's get into the next thing, which again is filing your taxes. Now this I actually marked up, but before we get into this, I kind of want to go over this really quick. So when you're filing your taxes, again, I'm not a tax expert. I do not do taxes for a living. I do my own personal taxes because I just don't really like paying people to do something that I feel like I can do. Now, as my money progresses and I make more money and my stocks and my crypto and my bonds and all that stuff like really starts to progress heavily, then I'll probably start going to a tax expert. And pertaining to my business, my LLC, definitely I go to a tax expert and let them do the taxes on that because you want to get the deductions. And in which case, I'm going to go over some personal deductions that you guys can actually take off that you may not have thought about, or maybe you do know, I don't know. But this on the IRS website, we're on irs.gov. This is where you can file your taxes for free. So if you're using TurboTax or one of these companies where you're filing your taxes on the internet and they're charging you 30, 40 bucks, 50 bucks, all that money adds up. You can literally file your taxes for free right here. Like, you just click on it, free file, and you can literally file your taxes for free. So I wanted to share that with you guys so that you can know how to do your taxes for free. You don't have to pay. And the software that's used for this free tax software, it is the exact same software that's used by TurboTax and Initiate, I think they're called, INUIT, I think they're called something like that. It's the exact same software. So don't be fooled, right? You can literally do it for free. That being said, this is a article from CoinMarketCap that talks about 10 things to keep in mind when filing your crypto taxes. This is from 2020, so it's a little old, but it is still very important. Again, the link is in the description. You guys can read the whole article. I kind of want to come down to right here, number 8, which is if you have capital gains, use Form 8949, sales and other dispositions of capital assets, and then summarize capital gains and deductible capital losses on Form 1040, Schedule D, right? And what this is talking about is you can file your gains, right? So whatever you bought it went up, you sold it, you file for that. But you can also file your losses. So you bought it, the price went down, and you sold it. You can literally write that off, that loss. You can write that off and gain money from it for losing money. You literally gain taxes off of it, or at least you would reduce the amount of taxes that you owe the IRS because you lost money while trading. So that's what this is talking about, these two forms. And now we go straight into the IRS website, which talks about capital gains tax. Now, I am specifically focusing on married couples who file jointly or file separately. Again, the information is here for you guys. But me personally, when I file my taxes, I do head of household because I'm a single man with children. So I file head of household and when I file. But let's say you're an adult and you're living with somebody, right? You have a roommate, you're living with your mom, your dad, your brother, your sister, whoever, but you're living with another adult and they file head of household. You cannot file head of household. You would just have to file single adult, right? And in which case, we're going to get into the capital gains tax because this is very, very important. Now, who I'm talking to are anybody who hasn't been working. So me, I have not worked in 2021. No, I didn't work. I think I worked for like 3 months or 4 months, something like that. But whatever. The amount of money that I made through working was maybe $10,000, maybe $20,000. I didn't really make a lot of money for the couple of months that I was working. It wasn't a whole lot. I think I made like $3,000 a month, something like that. So it wasn't really a lot of money. And in which case, again, I'm not telling anybody to file their taxes, but it's important that you understand that some or all net capital gain may be taxed at 0%. In other words, you don't have to pay any taxes on the money that you made. If your taxable income is less than or equal to $40,400 for a single or $80,800 for married filing jointly or qualified widower. So again, in my situation, this is just single, but again, I file head of household, so this wouldn't actually apply to me. But if you're single, you're living with your brother, your mom, your sister, your dad, whoever, another adult, and they file head of household and you just file single, and let's say you did work a little bit of the year, and let's say you made $20,000 for the year, and you bought crypto, you bought it low, and you sold it high, and you made $10,000 off of your crypto. That means in total, you only made $30,000 for the year. That means that you fall under the 0% capital gains tax. So yes, you would file the taxes for your stocks and your crypto that you bought and sold, but you're not going to have to pay taxes on it because you made less than $40,400 for the year. And in which case, now we go into a capital gains rate of 15% applies if your taxable income is more than. So let's say you did work for the year and you made, I don't know, let's say you made $30,000 for the year, right? Let's go off me. I'm a single man. I'm filing head of household. I made $30,000 for the year. As a matter of fact, where is my, let's see if we can put this on the blackboard so that people can get a better understanding of what I'm talking about. Where is my app? Right here. Whiteboard. Boom. All right. So what are we talking about here? Let's stick to what we're talking about. Boom. All right. So I started to do it yesterday. I started it a little bit. So at 15%, right? This is what we're talking about. All right. Let's see here. Why is this thing doing? Oh, here we go. 15%. Boom. 15% for most individuals. Sum of all net gain may be taxed at 0%. Capital gains rate of 15% applies if your taxable income is more than $40,000, but less than $445,850 for a single person. Again, if you're single and you made some money, but we're going to go off me. And now let's say I made $30,000, right, for 2021. That's how much I made. I wish I had my stylus, but my battery went dead. And last night when I was trying to do it, my battery went dead. So now I have to use my mouse, whatever. So I bought a new battery. So next time, hopefully in the next videos, I'll be able to write and show you guys a better example of what I'm talking about. So I made $30,000 for 2021. And let's see what head of household says. Less than that. For single, more than $80,080, but less than $501,600 for married filing jointly. Okay, right here. So $54,100 to $47,000. What is that? 47,000. Oh, 47,300. $473,750 for the head of household. That's where I file. So I made $30,000 for the year, right? And in my crypto, right? Let's say now we're gonna go into, let's say, right? So for our capital gains, let's make this a little bit smaller. So now let's go into our capital gains, right? So this is what we got. This is how much we made. This is working. working. Put that here, working. Right? So this is how much we made working. Now we're going to go off of stocks. Let's say in our stocks, right? Our stocks, we bought low, we sold it high. We didn't sell a lot, we sold a little bit. Because remember, you only pay when you sell. That's when you pay. You pay when you sell it. You don't have to, if you buy it and you still haven't sold it, you don't have to pay. So let's say for our stocks, we made $10,000, right? Bought in low, we sold it high, we made 10 grand. And let's say for our crypto, right? Crypto, let's say we made, I don't know, 20 grand. Let's say we made 20,000. Boom, right? So now with the $20,000 that we made and the 10,000, that's 30,000. And our job, we made 30,000. That means in total, our total here, right, is going to be 60,000. We made $60,000 for the entire year of 2021, right? Now, with that being said, let's go back to what the IRS is saying. The IRS is saying is if you made more than $54,100, you have to pay 15% on your capital gains tax. So we see here, we got $60,000. That's how much we made. Oh, snap. Why did that move? All right. So we made 60,000. So we have more, right? So what are we getting taxed on? What is the 15% getting taken out of? Because it's not coming out of the whole 30 grand that we made. As a matter of fact, let's get our calculator now. All right. Well, it looks like I want to pull it up on my computer. I can. What is it doing? Oh, here we go. Let's get our calculator. Boom. All right. Why won't it give me the thing at the bottom? There we go. Let's get our calculator. So now with our calculator, what we're going to do is we're going to say $60,000. That's how much we made, minus the minimum that the IRS wants us to do, which is $54,100, equals $5,090 is what we have to pay 15% capital gains on. So you do that times the 15%, which equals $885 in taxes is what we have to pay. And again, I'm not a tax expert. I could be wrong. My calculations could be wrong. I highly doubt it. If I am, again, let's talk about it in the comments, point out where I made my mistakes. But I'm almost certain that this is exactly how it works. You should go talk to a tax expert to get your taxes done. But I just wanted to really share this with people because I think that it's very, very important that people understand the way that stocks and capital gains and taxes actually work. Now, with this being said, I have a list. You can't really see the list, but I have a list of things that are actually deductible that people may not really understand or know. So a few of these things are unemployment taxes and Social Security money. So if you get unemployment, you may not notice, if you got it for the year, you may not have noticed that they took out taxes out of it if you told them that they're allowed to take out taxes. You can actually file for the taxes that was taken out of your unemployment money, and you can put that on there. Same thing with Social Security. When you get a Social Security check, whether it's for being crazy, disabled, old, somebody died, and so the kid gets Social Security, whatever it is. But if they take out any type of taxes out of that money, you can file for that and get reimbursed on it, right? Also, investment losses. As I said, if you bought it high and you sold it low, you can write that money off. I want to say it's up to $3,000 per year, but I'm not 100% sure. In which case, I think I had that marked right. Losses. If your capital losses exceed your capital gains, the amount of the excess loss that you can claim to lower your income is the lesser of $3,000, $15,000 or $1,500 if married filing jointly. So again, you can file for your losses. That can actually reduce the amount of money that you owe the IRS. So something to keep in mind. Also, daycare. Daycare for elderly, disabled, and children can be written off on your taxes. You can write that off as a deductible. So that's something to, again, keep in mind. That's why you want the receipts. You want the paperwork. You can actually go to the school, not school, but the daycare, and they will give you a form stating how much you paid in total for the year, and that you can again write that off as a deductible. Daycare, money in your IRA or retirement, that also is a write-off. So if you put $3,000, $2,000, $1,000, $100, $200, $50 any amount of money that you put into your Roth IRA or your IRA, that is a deductible. You can write that money off. You can tell the IRS, hey, listen, I've been putting into my my retirement account, and that's essentially a tax write-off. Again, check with your tax person, your tax expert, just to double check. But I'm almost certain it's a tax write-off. At least for me, it's a tax write-off. I've been writing it off. And paying for college. If you're paying for your classes out of pocket, at the end of the year, the college is supposed to send you a form to show you how much you paid for the year. That is a tax write-off. You can write that in your taxes as a deductible, and the IRS will reduce the amount of money that you owe them because you're paying for college. You're paying to better your life, to better yourself. So these are just a few tax write-offs that I wanted to go over with you guys, and a few things that I wanted to go over with you guys pertaining to the IRS. Again, I'm not a tax expert. I don't do taxes for a living. I'm not a financial advisor, but I am a guy who goes out of his way to educate himself on various different subjects and topics. So, and when I'm wrong and I don't know something, I usually go to somebody who does know and I ask them and they explain it to me. I encourage you to do the same. Don't just think you know, because a wise man knows that he doesn't know everything. And a wise man also knows that he doesn't know. And so because he doesn't know, he would go out and look for the information so that he does know. With that being said, thanks for watching another episode of Clips of News. Let's all remember, guys, we all out here just trying to survive and be happy. Y'all stay blessed.